Hey guys, hope you're having a brilliant day. Hope all is well. Welcome to the YTK weekly recap. I'm going to go through two pairs in particular of trades that profited quite nicely off the previous week, and that is Usdchf and gold. So I was looking for shorts on Usdchf. So I wanted to see a reaction for significant levels in price, and I want to show you the top-down analysis and the reasons why I actually took the short. And let's get right into it. As you can see, price above this significant level, price managed to take out this significant high. So price managed to take out the 1.01287 region. Price took out that significant price high, broke below, managed to raid the stops below this significant monthly low. So it managed to take out the low of 0.97160. So as you can see, we've closed below this significant low. This down candle pushed price up, and this up candle probably which pushed price down. So we had a bit of a break in MS to a certain degree, where price is reacting off this breaker zone of price and also reacting off this key monthly supply zone of the bearish order block. And you can see that price managed to take out these monthly stops, where price managed to take out the 0.99760 level. So this is November, this is October, this is September. So August's high got raided completely, and so did September's high get taken. So we managed to sweep the stops and liquidity above these significant key levels of price. Furthermore, if you can also see that we were also below the monthly open of 99.770. Let me mark at 99.770. So we're below the monthly open, managed to raid the stops of the previous monthly high. And we also have pending liquidity points of where the next level of stops are pending. So I wanted to be able to find this significant low of September. So the low of September was the target for me in price in looking at the level of 97.982 and also August's low, where the ultimate liquidity point of stops are resting below the 0.96600 level. So we have the stops resting below there and also steps resting below there. So that's where the key liquidity points in price of where I was actually aiming for significant shorts. So on a weekly now, as you can see, we managed to be able to find key resistance at this up candle prior to a down move. But as we're finding key resistance, let me mark out this block more clearer. We managed to raid the stops of that significant block. So managed this up candle prior to the down move, price found resistance, 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 till it raided the stops above that significant high. So as we managed to raid the significant stops where price managed to raid that significant high of price, we managed to push price below and break market structure and create a new lower low below the previous higher low. We managed to close below the significant low, even though it's very hard to see. This last bullish candle was the last bullish candle to push price lower. So this up candle prior to the down move is the weekly bearish order block. So price managed to dip back into that price zone. So as we dipped into that price zone, all I was waiting for is price to be able to take out this significant monthly high of 0.99550. So as we raided the stops of that significant level, price dipped into the EQ of the weekly zone, and I wanted price to come down into this level. However, I also delineated targets of this structured low of price, where I wanted to the 0.98430 region to get taken. However, and at the time, we were below the monthly open of 0.99462. So as we raided the stops, I wanted us to get beneath the monthly open 0.99462. So we can be able to have added bearish market sentiment in terms of looking at the order flow and structure of price. So on a daily now, as you can see, we managed to raid the significant high and create a swing high fractal. And as you can see over here, we've broken structure towards the downside where we closed below this liquidity low of 0.9905. So price closed below that significant level. This was our last bullish candle which pushed price lower. So this bearish order block, daily bearish order block, that's within the EQ zone of price on a weekly. Price managed to raid the stops, took out the daily significant high as well, which was also known as the weekly high of price. So we managed to take out the 0.99550 level, which was the weekly high, swept the significant stops, and create a swing fractal into price initiation. As you can see, that entry came from this down candle prior to the up move, this 4-hour breaker zone of price. So this down candle prior to the up move, price dipped into it and managed to be able to have a bit of a accumulation right before price distribute to the downside. You could have caught quite a few entries if, for example, you knew how to be able to pay attention, especially through, as you can see, price raided the stops, price accumulated, swept the significant high. And as you can see, this is a last bearish candle push price higher. So this breaker zone is where you could have had your entry. I already was in from the top, so but this could have been a compounded entry. I didn't take this one, but I took the one from the top. So I was already in. But when I saw price break structure below on the hourly and retest this particular zone, that's when you know price was going to sell off. And as you can see, this is I managed to get out at the 0.998600 region, around there. Reason being because it was NFP and I didn't really want price to react off this significant level of this block over here. I didn't like the look of this H4 zone of price. So I marked at this level of price where I detected a potential reversal. See, price reacted off that level and immediately closed in due to NFP. But I closed at this significant point of this H4 close. Reason being because I didn't want to have the hassle of the fundamentals causing me unnecessary issues in the market. Furthermore, I want to go into gold short. So I managed to catch a very nice, what was my entry? That was my entry. So I managed to catch around 105 pips. I managed to close anyway, you know, with my validation level. So it was a pretty decent trade. On gold, I want to show you the longs which I took on gold and why I actually took gold longs. As you can see, the structure of price, where you can see that with this significant channel, you can see the significance of structure. Price creates a lower low, price creates a high, then price creates a higher low, then price creates a higher high. Then as you can see at the moment, price was creating a higher low, so I wanted to catch the lower high of price. So with the flow of price, I was looking at it was very, very bullish to me. This is the level of price where this up candle prior to the down move, the 1561 region, the liquidity pending above this monthly high. So as you can see over here on the of this significant high of 1557, we managed to, what I wanted to see was, for example, as we rated the monthly stops, we can see the stops are pending above market anyway with this upside sell side liquidity. We managed to raid the sell stops above here, and we managed to raid sell stops below the significant level, and now we have buy side liquidity towards the upside. So we managed to raid a significant low of 1464.5. So we managed to raid that significant low. As you can see at the moment, what I wanted to know was if we're above or below the monthly open. So the monthly open of price, we will manage to get beyond that significant point. So we're above the monthly open. We've swept the liquidity point below the previous low of September, 1464.5. We have buy side liquidity towards the upside, and we also have a key bearish monthly supply zone at 1561. So on a weekly, we managed to have this liquidity support zone where price managed to sweep the stops on numerous occasions, where price managed to find support, raided the stops, carried on raiding all of these lows, and price is just finding key support. And as you can see, prices was pushing up towards the upside. And I was marking out liquidity points on a monthly because this is a period of accumulation for me right before the potential distribution of price. So as you can see, what I was looking at in price was the stops that are pending above this significant high. So each weekly level or each weekly highs of price is what I was aiming for. So where the stops are resting west, so you expect smart money to take over. So as you can see, the weekly open of price was previous week was 1504. So let me get rid of that for a hot second. So as you can see at the moment, we have a lot of liquidity support at a significant level. So on a daily now, on a daily, all you can see is price accumulation, and you can see a lot of various price stops. This high got raided, but this significant high was still left to be found. So there's so much sell side liquidity to the upside. So there's so much levels of stops of price where I'm still expecting to eventually get taken out. Where you have these equal highs of price, and also the monthly high, and also the stops are pinning off there. This was actually my ultimate target, but what curved for me was after the accumulation of key support of this down candle prior to the up move, price was accumulating. Then we had the expansion of price. So once I noticed we had an expansion on price, we managed to close above the significant high. So as we broke above the significant high, price managed to come into the last bearish candle to push price lower. So as you can see, this last bearish candle to push price lower. We managed to take out the significant liquidity low. I had a few different types of entries on price, to be honest with you, because on H4, it gave me, for example, I had buy entries where this one was my most specific one. However, what I did was put my stop a little bit below. I put it in the 1280 region. So stop placement is very, very key. Reason being because this was my validation. It was 1480. So 1480 was the significant level of price where I didn't want it to raid. So after it raided this, I thought I was going to get stopped out. So I had a few multiple buy positions in. And then I wanted to make sure I get out of the trade at 115, 1515. Reason why I wanted to get out of this significant level, because I know it's a bearish OB. So I was expecting price to be able to cause me some sort of issues, and I didn't want to be in the trade through NFP. So price managed to raid the stops. I was in from this significant level over here. So I was in from, for example, 1287, 1285, and I had multiple positions, and also managed to catch other positions at 1293 and 1295. So and price managed to hit TP, and that was pretty sweet. And it's reacted off that significant bearish OB like we've spoken previously about. So this was the level where I was expecting price to be able to tag just like it did on that breaker again, and it had that aggressive reaction like it has previously. But that's what it was for me. I had a brilliant week in the market, cannot complain. And it just goes to show, for example, the type of trades that you can take once you take from significant price levels. So this was about 300 pip move. The other one was from about 200 pips, and the other position was about 230. So there's quite a few decent positions that we took, for example, in gold longs. Everything was actually distributed in a group. And if you want to see the before and afters on price, let me go on the documents. Okay, where's the pictures at? Okay, perfect. As you can see, this was actually given up in a group. So here's the short position. So on Usdchf, where all the stops, where price broke market structure, this was the liquidity low of price found key resistance of the zone, and these were everything we've explained previously in the weekly recap. And this is the result of the trade, and I managed to get out of the bond before the even stops were taken. So, and also on gold, let me see, it's a USD. Okay. Where is it? So here it is. So this is the range play of price, where price managed to find key support of this significant zone of price. So this is where the mid flow of the range was. This is the high of the range, and this is the low of the range. And the rest of it is where the sweet spots of liquidity were pending above that significant level. So price dipped to that level of the confirmed higher low, then you expect the higher high. So, and this is the result on price. Managed to hit our level to the pip of the range high, and managed to catch the 11515 region, and you managed to get out of trade. So I can't really complain. We had a brilliant week in the market. I hope you enjoyed this weekly recap. I hope it was insightful. If you have any questions, you can always DM me at YTK Young Trade King on Instagram and Twitter, and I look forward to hearing if you have any more questions. But I hope you have a brilliant week in the market, and I hope you enjoyed the video.